welcome to everyone, and thanks for joining this presentation. So I've been asked to keep it within half an hour, so we have time for questions as well. I might be a little bit quicker, maybe, if I don't go too much into detail, because I typically find it more interesting to take your questions and hear what topics you'd like to dive into more before talking too long about something that may not be your focus area. So let me just quickly start by introducing myself and Conda.ch, which is our crowd investing platform here in Switzerland. So I am one of the co-founders, together with Christian Klumpe, of Conda in Switzerland. Conda as a company, as a crowd investing platform, has existed for almost 10 years in Austria and Germany, and it was only recently, so at the end of 2021 actually, so a bit more than a year ago, that we launched also in Switzerland. And we've seen that there is why did we do that? Because there's a lot of crowd investing, crowdfunding platforms, etc. Now I'll get into the distinction of these different terms in a bit, so hopefully get that sorted for you. But we saw that there is a need for startups in Switzerland to have access to equity via the crowd. We've seen that there were a lot of lending solutions, donation solutions, etc. Not really a lot of equity solutions available, and that's where we see that I think we can add some value and enable startups to grow in that way with capital, with their investor base, and enable, of course, investors from small amounts to invest into very exciting and growing Swiss startups, which are a lot out here in the market. So I'm very excited to be in the middle of this market now as a platform and be able to work with these startups and these investors to hopefully enable them to grow and to achieve targets which they may have otherwise a difficulty achieving, or may not have achieved in the same way that we would have done. So that's really what we want to achieve. That's what crowd investing is about, what we're about, why I'm doing it. And you can see some numbers here on the left. Of course, the Swiss numbers are a bit smaller than the overall numbers in the whole DACH region, as we call it, with Austria, Switzerland, Germany. But given the fact that we only launched a bit less than, or a bit more than a year ago, we're off to quite a good start, as you can see. So we're happy to see that there's traction and need in the market, apparently, from both sides for what we're doing. And I think this is also what probably sparked the interest from those of you joining here and for these kind of presentations to be held, because people want to learn more about it. I mean, it's not that known yet in the market. There are not that many players in the market really focusing on equity for startups, which might be a good or a bad sign for us. I think I would like them to be a bit more, because we cannot cover everything. Not everyone can know about what we're doing. I think as a topic, crowd investing has a lot of potential, and it's by far not really exhausted yet. So I see a lot of future growth coming in, and I expect that we're seeing entrants coming in from different angles to the market as well. Maybe some of you will typically ask questions about what about this platform, what about that platform. I'll be happy to try and answer that later, as far as I know our friends in the market. So it's not a presentation about Conda mainly today. It's more a presentation, as you've seen on the title, as on crowd investing as a source of funding for startups. So it's also targeted more towards the startups than towards the investors. Feel free to ask questions from an investor point of view as well. I'm happy to take them, but we've deliberately geared the presentation towards the startup side, and see how do I, as a founder, as a director of a Swiss startup, what are my possibilities, my advantages, etc. If I want to consider crowd investing as a source of capital, as a source of funding. Right. So let's dive into it. What is crowd investing? And here, since I don't really know the exact knowledge level of the audience, I'll just give a brief overview. I would not assume that everyone knows the terminology. Now, typically you'll hear about crowdfunding or crowd investing. And if you look up the terms and different definitions, you'll probably find different ones. The way that I like to look at it and to define it and distinguish to make it more clear is kind of in the four quadrants that you have here. Now, on the left side, on the left half, the two left quadrants, you have crowdfunding, meaning it's not an investment where you really expect a return on investment, at least not a financial return investment. It's more in terms of supporting a good cause, or maybe someone is launching a product or a service which is not quite launched yet, and they would like to have a chance to find people who are excited about this. There might be a new product, a new, I don't know, the next cool smartwatch coming out, and you say, oh, I'd really like to have this. I'd like to be part of that. So I will prepay kind of the capital needed to help produce and finish the design and production of the smartwatch. It will be done in half a year if they successfully fund the project. And then I'll get mine. I'll get it earlier. I'll get it a bit cheaper. I'll be one of the early movers in the market to have it. So I feel cool, and I supported the company for them to enable to do it. But I'm not seeing my money again. I'm just getting the product basically that I help support. So this is kind of one model which is out there, which we call reward-based crowdfunding. You have donations, of course. There are platforms for that. I was actually founding one many years ago, which was called SoSense, where we were doing crowd donations for social entrepreneurship projects. And that's obviously a one-way transfer. So you are supporting with the money. It's being sent to the receiving organization. You get a donation receipt. You hopefully get some reports back on how if it's working well, how they're doing with the money. You get what you could call a good conscience, or what's in more formal terms would be called a kind of a social return on investment, environmental return on investment, but you will not be seeing your financial return on investment typically. Now on the right side, which is more what we define as crowd investing, typically roughly you can divide it into equity on the top right and lending on the bottom right. There are some mixed forms as well. Now equity is obviously just investing into shares, so you really become a shareholder of the company, typically with or without voting rights. It's quite common in crowd investing to run without the voting rights, because it becomes quite a cumbersome process for a startup which maybe has 2, 3, 4, 5 shareholders, and suddenly they have several hundreds of thousands after doing crowd investing to kind of manage that with the voting, etc. There are solutions today online for that as well, but typically they are some are a bit scared of that and say, okay, let's do the non-voting shares, so everyone is a shareholder with equal rights except for the voting at the General Assembly, and those are the term for that is a bit of a complicated one. It's participation certificates, which we have in Switzerland, which is exactly the same as a share, but without the voting rights. And then you have the lending. There is anything from straightforward, plain vanilla kind of loan with a fixed interest and fixed annuity, runs for 5 years, 5% interest. You get paid the interest every year, and then at the end of it, you get paid back your capital if everything goes well. But there are also more mixed forms where lending is kind of used as a substitute for equity. So you have this basic interest rate running that might be conditioned with conditions such as only when the company can afford it, only when they have a positive EBIT going, you get to pay your interest. Before that, it's just accrued. And if everything is going really well and you receive or you achieve the targets in the business plan, you also receive kind of a reward, additional interest or bonus interest rate at the end of the project, which will kind of make it more similar to normal equity in terms of the reward that you're getting, but you're still kind of getting the loan, the interest rate as a base in any case, unless of course the company defaults and cannot pay their loans. And typically these are also subordinate in nature as a loan, so you have a bit less security in, let's say, the bank, which may have the first priority on the loan, for instance. So it's kind of an additional lending instrument. And then you have different mix forms, etc. But those are not too common in the crowd investing market, because if you make it too complicated for the crowd investor, the average investor will say, I don't understand it. It's too complicated for me, so I'm staying out of the investment. You have to keep it rather simple and comprehensible for people. We've seen that also. You get otherwise. Sometimes startups are putting a bit complicated terms in the contracts. We get a lot of questions from people who are not seasoned angel investors or VCs, will not be used to understanding all these kind of typical quirks of investor contracts. So you need to keep it rather simple and at least able to explain to the investor what the terms are and what they're actually investing in and what kind of return they can expect. Right. Now, from a startup point of view, what are the advantages of crowd investing? I mean, you will, if you, let's say you have a very attractive investment case, ideally, you will have the choice of different sources of funding. It might be anything from just your own bootstrapping or own funding, which typically startups use to get started, through to getting angel investments, maybe even venture capital when you're a bit more mature. So where does crowd investing fit in here? What is the advantages? Why would I want to have so many new small shareholders to manage in my company? Well, one is obviously that it is giving you, in additional to the capital that's obviously you will get from the crowd, it also gives you a marketing effect. It gives you a loyalty of those investing. Now, some of the startups we've seen doing this well, they've measured after their investment campaign to compare customers who are invested in them. A lot of the time it's actually customers investing. And if they invest and were not a customer, they will typically become a customer, and they will become a very loyal customer. Now, why is that? Well, you can imagine if you invest into a company, you think, oh, this is such a cool startup. Of course, you will want to use their products. You will want to tell your friends to buy their products. You will have an interest in promoting also their brand and making them successful because you're invested. So you become kind of a loyal customer and a good ambassador for the brand. So it has this kind of positive side effect of growth and marketing as well, which you don't get typically through let's say other sources of funding like banks, etc. It also means that you can keep the process of investment rather open. So it's you could define kind of a threshold minimum, how much you want to raise in this round. You can define a time period which you're moving within for the crowd to sign up. And you, of course, you have to define a limit somewhere, how high you will go as a maximum before the round is full. And you reach anywhere between the threshold and the maximum, and your campaign is successful, and you will get the capital collected and paid out at the end of it when doing the capital raise. So it avoids a lot of these kind of fixing the sum and negotiating with different angels, etc., back and forth. Here you put the contract. It's a take it or leave it contract for all investors, and those who want to sign up to it, just click online and sign up. And brings me to the next point, online process. So you put all the contents out there, which hopefully will attract investors. You put your contract, your digital signature, certificate, etc. And at least on modern crowd investing platforms, this is a digital process, apart from the part where you, of course, afterwards you go to the notary and you sign on behalf of all the investors. That's the notary still requires you to kind of pass by and identify yourself. But you can do this, if the process is clever, you can do this by collecting all digital signatures and the power of attorney. So the investors never have to kind of all show up at the notary office. You just do that, or the representative of the platform such as us would do that, and make sure that the capital raise goes through and then the capital gets paid out. You also typically have payment solutions integrated so that people can pay with simple bank transfer, credit card, and tracking who has paid, etc. Is all done over the platform. So you don't have to kind of run that would be quite a cumbersome manual process if you had to do that manually with several thousands of investors over some sort of capital raise account in a bank, which typically doesn't offer that service. So through like a good online platform, you actually have a chance to perform such a process with many small investors in a very lean process kind of way, which I would say previously, when you didn't have that digital solution, would not have been worth all the work. You get a small investor with a few hundred francs, you'll have more work to kind of process that than it actually brings you. But today, thanks to, such as with many other things on online platforms, you kind of have a process which enables you to scale such a process, so it's still not so much work per investment coming in. Now, let's see if I can get to the next slide. Here we go. Now, for whom is crowd investing suitable? Now, this may vary depending on the platform, depending on a little bit the market you're in, depending on the situation. So don't take this as kind of a strict criterion list, but from our experience, what gives you a chance to be successful in crowd investing? What gives you a chance to, or a probability to kind of have the advantages that I just talked about? It's not necessarily a form of funding which is suitable for everyone. So there might be in some cases that you are better off, depending on the phase, depending on what kind of company you are, etc. You might be better off looking in a different source of funding. So just to give you a few ideas, it's probably a good idea if you have a limited company, so in Switzerland, Aktiengesellschaft, because if you let's say you have a LLC, a GmbH, or any other type of company form, it becomes very cumbersome to add a large number of investors, and as you know, a GmbH, you would have to put them all in the basically in the company registry and have that all public, which the investors probably won't want. So probably once you have a limited company, the process will be much smoother. If you do not, the option of crowd lending might still be suitable, but if you're really going to do an equity deal with a lot of investors, it's probably better if you're a limited company. We would usually also say that if you're not aiming for more than 100,000 francs in your round, it might be a bit too much work and too expensive to make it worthwhile. You still have a certain setup costs. You need to get all the content and everything ready. And if you go about to collect, let's say, just 50,000 francs, maybe if you have a couple of angel investors who each do 25, that might be the more efficient way to do it, because you're not going to collect a lot of crowd investors and have a lot of benefits from just doing, let's say, very, very small rounds, and kind of the crowd idea gets a little bit lost. Again, there might be exceptions to that, but that's typically kind of as a rule of thumb, I would say, a threshold that you might want to look at before going into starting a whole crowd investing campaign, because there's also a lot of marketing efforts, etc. involved. I mean, both on the platform side, but also as a startup, you probably need to plan some marketing activities, budgets, etc., to try and gain as many investors, of course, as possible as you could possibly get with your campaign. And for that, people need to be, as with any marketing for products, it needs to be made aware that you exist, that you're a good case, that you should be investing now. And to do that, any company, it doesn't matter if it's already a well-known company or not, they're going to have to invest a lot of marketing, communication, campaigning into convincing people in their network and their extended possible investment network to reach them and say, hey, come and invest in us. So that's also one reason for saying don't go for too small, because the effort you'll have anyway, and it will just become bigger in relation to kind of the capital you're gaining. Right. It's also probably an advantage if you are operational and you're making a turnover. It's not necessarily a fixed criterion, but why is that? Because then you're likely to have customers, you're likely to have more traction in the market. There might be already a few papers writing about you if you're an exciting startup with an exciting product. And this, of course, helps you reach and helps you have kind of already a potential good investor base, which is always helpful. Of course, depending on the platform, this platform will have a lot of investors on it as well, which knows the platform, which always checks in. But it's always a good idea and a good prerequisite to also yourself as a startup kind of bring these potential investor base with you. And to do that, yeah, it's helpful if you're an operating company with a lot of customers. Based in Switzerland. If it's not, of course, there are a lot of solutions for crowd investing in other countries as well. But at least if I take the example of the Conda platform, it becomes, if you're going to run it on a Swiss platform with a foreign company, you have a lot of regulatory aspects that you need to look at. You might be better off running with a platform in the company or in the country where the company is actually based. We've seen examples of Swiss companies running on British platforms or the other way around. It works, but there are a lot of transaction costs. You have different currencies, you have different regulatory frameworks, etc. So in some cases that can work, but it's typically easier and more straightforward and more worthwhile to just go, both for you and for the investors, to go with a platform in the same country that your company is based. Right. I thought it was a quick sneezing break there, but it's kind of blow over. So let's see. might need to mute soon again. Sorry, I think it's it's very strange. Today it's snowing again, you know, but the past couple of weeks were so warm. I think something went into bloom and I have a bit of pollen allergy. So it's very strange to get in January, but I'm not sure if anyone else noticed. So sorry about that. Right, where were we? So it's yeah, as I mentioned before, it's probably worthwhile if you're a not-for-profit company. You're probably not that exciting of a pure financial investment case. You might be a good case for some sort of social investing, donation, etc. But we don't see a lot of cases where people are just convinced to invest kind of equity financial return type of investments. If the focus is more on let's say a social or environmental cause, you need to kind of then adapt the type of investment or the type of instrument that you're offering probably to that character of the company or of the investment. It's quite hard to do a mismatch where you say, okay, we're doing this for a fully social cause. We're not looking to make money, but we're still expecting investors to invest in us based on kind of a financial return, or the other way around. If you're just purely a financial profit company, not really with a social or environmental cause, you probably also wouldn't expect to get a lot of donations from people just for what you're doing. They say, well, why should I donate to you? You're a for-profit company. So you need to kind of match your what you're offering to investors depending on what you're looking to give them in return and what you're actually doing. That's not to say though that a good case with a company which has a sustainable footprint, let's say combined financial, social, environmental cause wouldn't work as an investment case. I would say on the contrary, these work very, very well, because for crowd investing, it's even if you have a very good case with, outlook of very good financial returns, people in the crowd will typically also always a little bit more invest with their heart as well, to say, oh, but I like what you're doing as well. I kind of identify with you, I'm a customer, or I've heard about you, or I think what you're doing is good. So the topic of green or sustainable investing is obviously very much growing, and we see this in the crowd in particular as well. So it's not to say that you should not have a social or environmental cause as part of what you're doing, but you still need to kind of have a case for a financial return to the investor as well. Otherwise, you become a complete different asset class and people will look at you as something, should I donate to you or to the Red Cross or to WWF, rather than should I invest in you or in the stock market or in another startup. So you need to figure that one out. Yeah, it's always good to have documents. As with all types of investors, it's no different in the crowd. If they cannot see that you have a clear business plan, financial plan, a good investment case, you're not likely to get a lot of investment. So you're not getting around that one. Investors might be not so big, not so experienced, but they are not stupid. So you still need to kind of provide a good case. And if people see that it's not a good case, we see quite quickly that we get a lot of questions where people are saying, but how come you have this valuation, and how come you have this forecast, and how does that work out, and how does that give me a return, et cetera, et cetera. So you can't fool the crowd. You still need a good case, and you need to be able to prove it. Right, a few other points on there, but I'm not going to dwell too long on those. Yeah, if you have certain types of industries are typically not very suitable because they're not popular in the crowd. So that's why I've kind of listed them on the bottom. But I'm sure someone will find an example of someone in one of these industries which are crowd invested as well. So there are always exceptions to the rule, but it's typically hard to make a case with crowd who, as mentioned, they invest with their heart. They might not do this into these kind of areas. Just to give you an example of a recent current and crowd investment case in Switzerland, which was quite successful, one of the most successful crowd investing cases, I would say, in Switzerland ever, and definitely of last year. Nikken, some of you might know them already. It's a sustainable fashion brand, basically founded and built up entirely in Switzerland, and been growing over the past few years. So we're now looking to fund their growth even more, to expand, and to get the crowd engaged in what they're doing also, because they have a very good crowd as customers. Now they wanted to get this crowd also as investors for the reasons which I mentioned before, and went in there with a hope to at least, I would say, raise $1 million, put the threshold at 250,000. That was reached very, very quickly, and they did not even get to the end of the possible period, which would have run into January, before the limit of 5 million was reached. So, and the contract was limited at 5 million, and we had to. It was done over Conda, as you can see. So I know the case quite well. We had to start running a long waiting list of people who kind of missed out to invest, who still wanted to have the chance. And if someone pulls out, doesn't pay up their investment, you can kind of cancel them out and go to the waiting list and say, okay, someone didn't take their shares. Do you want them? And to still kind of reach the 5 million. But it was a very successful campaign. It's going to be very exciting to see how they make use of this crowd, how that's going to develop, what advantages they're going to see apart from getting a lot of capital, which they can now use to grow and develop the company. Yeah, very, very good case. Doesn't mean that everyone can come in and raise 5 million of a crowd investing. We have different types of sums. As mentioned, a couple of 100,000 is already pretty good. But they were, of course, I would say, I'm taking this example because they are ticking, I would say, all the boxes of what's a prerequisite to run a successful crowd investing campaign. You have a quite large customer base. You have a brand which people are, I would say, also when they buy the products, they're doing this with their heart a little bit. It has a sustainable component to it. People will typically not just know your website as a source of somewhere to buy clothes like Zalando. They will actually know that they will go to your brand for a reason. So they have a customer base of people who are quite excited about what they're doing, and a quite large customer base. They are very active on social media already. Nicholas is one of the founders, has a huge follower base on LinkedIn and some other channels. And that obviously helped when he said, hey, would someone like to invest in us? He got so many messages back already, and that kind of went viral, basically, thanks to that, and thanks to these algorithms, which are on LinkedIn and other sites. If people start reacting and discussing everything with 200 comments, then you can almost not avoid seeing it in your flow if you're anywhere close to that company. So it was really using also kind of all the advantages you can get from online marketing without actually having to invest a lot of money in online marketing, because they had invested all that work and kind of building up the follower base already, and it was just a matter of reaching them and getting them to invest. And they were very, very, it doesn't mean it's not any work. I mean, I know the founding team themselves, as well as the marketing team, they were investing hours every day to boost the campaign, to let people know what they were doing, to give updates, and to answer all the questions from investors. And those were quite a few. And they would sit down and take detailed and very well formulated answers to each question from each investor. It's not that all 4,000 investors are asking questions, but there were hundreds. And the founders themselves sitting down and answering these and showing that they're serious about what they're doing, and they're taking their crowd investors seriously. Even the ones that are just taking the minimum ticket size of 375 got a very good answer to any question they would ask. This was showing people that they were serious about what they were doing, and this was creating even more confidence with the investor base and allowing them to really fill this round. Now, we've seen very rarely a case where they're kind of really doing everything right and ticking all the boxes, but this was a nice one. And then you have everything from in between those who, really don't succeed with crowd investing at all, to such a case like Nicken, which could have done probably a lot more than they did if it had not been capped at 5 million. It was oversubscribed. So there we go. I'm not going to dwell too much into this slide. I think it will do if there are questions coming in, kind of how does the process look like, how long does it take, etc. You get a rough idea here, but I will probably bore most of the audience if I take you into this kind of detail if you're not really considering doing the crowd investing campaign. So just so it's there, ask a question, I'm happy to take it. Apart from that, I think it's probably time for your questions. Just this slide, as Andy mentioned in the beginning, contact details are being shared as well. So take it here on the screenshot or QR code if you want to, or just from the chat later. If you want to reach out afterwards and are interested or have more questions, happy to be connected.